We're looking at question number 4. And there's two things. These are my favourite questions, the cash flow questions, because I think they're easy. Hard, you reckon they're hard? Okay, I think they're easy, you think they're hard, but that's okay. All right, let's have a look. The following information has been provided by Charlie Chan for the year ended 30th of June 2014. And what we've got is we've got a list of accounts, and it says from the information below, it should say above, complete the cash flow statement for Charlie Chan Limited for the 30th of June 2014. Now, what's the first thing we want to do when we do a cash flow statement? Classify. And what am I classifying into? Financing, operating, investing, non-cash. All right, non-cash. Is there any others? There will be balances as well. But there's only a couple of those, and that's cash at the bank on the 31st of July, so that's that one there. So we've got 4 classifications that we're looking for: financing, operating, investing, non-cash. Now, because it's a cash flow statement, we're going to examine your ability to be able to determine cash, not cash, okay? So those are the two things we have to look at, so that's why non-cash is in there. All right. Here we go, another balance. Okay, so that's my opening balance. Cash at bank is a balance, I'll give you that one. And my cash at bank is another balance as well. Okay, let's go. What would I classify dividends paid in? Financing, operating, investing, or non-cash? Financing, I agree. Some people might say operating. Yeah, we can do that. What about interest received? Operating. Interest paid. Income taxes paid. Profit on the sale of a machine. Yeah, non-cash. So profit, words like profit or loss, non-cash. Bad debts written off during the year. Yeah, and once again, another non-cash. So bad debts is simply, I give the goods to the customer doesn't pay me, so therefore there's no cash flow. Okay? Cash at bank, which was a balance. What about depreciation? Yeah, depreciation is a book item, so once again, non-cash. Cash received for selling a machine. Investing, yeah, we're selling a non-current asset, so it's investing. Payment for buying property and land. Investing again. Loan repayments made. Financing, yep, I'm repaying money borrowed. Net profit before tax for the current year. Non-cash, yep. So once again, that word profit. Accumulated depreciation. Non-cash. Proceeds from a loan. Financing. Amounts paid to employees and suppliers. Operating. Cash received from customers during the year. Operating. And sales revenue earned during the year. Financing? Who said financing? Someone over there? All right, sales revenue earned. The key word there is earned. What I'm looking for is paid or received. E-I-V-E. So this one is non-cash. What we've got here is we've got my cash received from my customers. That's my revenue area. My sales revenue earned could include credit sales, which are non-cash items. So once again, we're working out, can you distinguish between cash and non-cash? Okay, and in this case, this one was non-cash. Caught a couple of people out last year, but admittedly, it's only minus a mark. So, all right, so I've got my classifications done. Now what I'm going to do is I'm going to tick off my non-cash items so they don't confuse me. Non-cash, 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 non-cash. All right. Now, what I'm aiming to do now is to start my cash flow statement. Now my cash flow statement starts with a heading. So it's cash flow for Charlie Chan for the year ending what is it, the 30th of June 2014. And the first section I want is my operating activities. And my first item is cash from customers. My cash from customers, which is 280,000. And I'm going to tick that off to show that I've included it. The next one I'm going to do is I'm going to do my amounts paid to my suppliers and employees. And suppliers and employees, and that's 235,000. And I'm going to bracket it to indicate that it's a cash outflow. Now you might want to put a minus there. Okay, that's fine. I don't mind minus. I use brackets because it's nice and big and bold and I don't miss it. But it helps me then when I go to add up. Okay, I can quickly pick, that's a plus, that's a minus, a plus, minus, plus, minus. Okay, whatever way works for you, that's okay. If you can remember it's an outflow, great. I can't do that. I'm not that good. Okay, so brackets is what I do. What other things have we got for operating activities? We've got some up here. Interest received. And what have we got? It's 10,000, and that's a cash inflow. So I've received the money. Interest paid. Which is 27,000. And because it's paid, it means it's a cash outflow. So once again, I'm going to bracket it. Income tax paid. Income tax paid, 30,000. And it's paid again, so it's bracketed. Any others? Amounts paid, yep, I've got those two. All right. So who's fast on a calculator for me? Negative 2,000 cash flow outflow. 2,000. All right, now my investing activities. Investing activities. Let's have a look. What do we got? Cash received for selling a machine and payments for buying land. So let's do my cash received. Proceeds of machine sale. Proceeds of machine. What is it? 50,000. And proceeds means it's a cash inflow. And I'll tick that one off. And payment for buying property and land. For prop and land. Which was 60,000. And once again, it's a payment, so I'm going to indicate that by a bracketed figure. Any others? Nope, good. So I've got an outflow of 10,000. And my last category is financing. Financing activity. So it should be all my other ones. Dividends paid. Oh, we could have put that into operating, but we could do it under financing. What do we got? Okay. Oop, I forgot to tick that one. Okay, loan repayments. My loan repay is 180,000. Oh no, it's 80,000. And that's a payment. Loan proceeds. So my loan proceeds are there, which is 180. I'll tick that one off. 180, so I'm going to cash inflow. Proceeds indicate inflow. Payments indicate outflow. And dividends paid. Is 7,000, and because it's a paid, once again it's a cash outflow. So what does that mean now? How much have I got? 100,000. How much is it? 93,000. And it's a cash inflow. So net cash flow. Net cash flow is my 2 plus 10 plus 93, 81,000. Opening cash. My opening cash balance was, I'll tick that one off because that then takes care of that, is 50,000. So therefore my closing cash is this plus this, which will make 131,000. So I get a positive cash flow. So that's my cash flow statement. Is everyone okay with what we've done to his point here? Okay, the next thing it says, that's question A. The next thing it says that Charlie has approached you for a loan. Taking into consideration the cash flow statement you have just prepared, would you advance him a loan? Give reasons. So what this is really looking at is my warning signs. What are my warning signs? Is Charlie going to be able to repay me is really what we're asking. Because I don't want to give money to someone that's not going to give it back. All right, so what's my warning signs that I should be looking for? Operating outflow. Okay, so my operating activities here, negative. Now normally the operating activities is where the business makes all its money. So you want this one to be a positive cash flow. So my first thing is item negative operating outflow. Operating cash flow, I should call it. You can't see. Okay, that's true. There you go. That's a bit better. How did that get there? All right, so I've got a negative operating cash outflow. What other warning signs is there in this cash flow statement? Investing. What about my investing? All right, what it looks like we're doing here is we're selling our non-current assets. We've bought some land, but we sold machinery. So we haven't replaced our machinery. So we're selling off our non-current assets. Meaning, if I'm not replacing it, I'm going to use to make money in the business. Any other warning signs that I should be looking for? Borrowed money. Yep. Okay, so I've borrowed this 180,000 here. Normally if I borrow that much money, I should be buying non-current assets. I'll just put a question mark there. Now what must be happening is I'm borrowing this money to use in my operations. So I must be using it to pay my suppliers and my employees. So the other thing is, so I'm borrowing money for operations. Now, the easy way to work that out is what am I buying here? What am I buying? So from my financing activities, you should be used to purchase my investing activities. If I've got a big borrowing in my financing activities, I should have a big outflow. So I should have a big inflow here, there should be a big outflow here for some sort of asset. Now what I've done is I've used this money obviously to prop up my operations. Okay? So the question is, would you advance Charlie a loan? No. For the above reasons.